Good morning. Welcome to Stock Market Today. It's Wednesday, May 6, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email where I get a lot of the content for this show, as well as give you daily stock ideas to consider upon further research. Hits your inbox every trading day before the market opens. So U.S. equities closed higher in Tuesday's trading, but near the lows of the session. Most sectors were higher, led by healthcare and technology. Treasuries were little changed with some curve steepening. The dollar was stronger versus the euro, while weaker versus the yen. Gold was up 20 basis points, and crude oil settled up 20%, with a June contract having nearly doubled in the last 5 days of trading. So your sector leaders, tech, healthcare, utilities, your underperformers. Financials only group to trade lower. After that, staples and energy. As we get to the desk this morning, futures are up about 80 basis points after Asian markets were mostly higher overnight, led by South Korea and Greater China. European markets are mostly weaker. Treasuries are weaker across the curve. Dollar is stronger versus the euro and sterling, but weaker on that yen cross. Gold up 40 bips. WTI crude up nearly 4%. And really, kind of the first bullet point is the best way to describe the market action here. Stuck in the middle with you. 3 weeks of going nowhere, right? So after the strong rally, we've essentially had 15 trading days of just nothingness. Stuck in this range with initial support in the 2750 to 2800 area. Below that, 2485 to 2660 intrigues me. Resistance 2950 to 3005. Break of that level opens the door to 3110-ish, in my opinion. We're not overbought. We're not oversold. Based on that 13-period CCI, Chaikin money flow is bullish but declining, right? So to me, it's kind of like you have your levels. Above them, you know what to do. Below them, you know what to do. In the middle, it's just frustration. Remember, there's no rule that says you have to trade. Work on your watch lists, look for your setups, or identify what's leading, like, large cap growth FANG stocks. Taking a look now at our market in a minute. Late day fade keeps equities in a 3-week range, and that we just hit on all that. Qs remain the best game in town. Large cap growth FANG type stocks continue to outperform. They are the best game in town. There's no two ways about it. Breadth is narrow when it comes to leadership. There's just no two ways about it. That's what it is. The 5 biggest stocks count for 20% plus of the S&P 500, and they're trading fairly well on the backs of their earnings announcements, right? So if you're bullish on the market, you're basically bullish FANG. Sentiment is flat on the week, but specs remain short the market. We'll take a look at that little new chart that I'm introducing in my note today. Banks are bearish and lagging the rally, and the reason I bring this up is because we talked about transports yesterday, right? And if you kind of followed Warren Buffett into the airlines, you kind of got what was coming to you. Well, he's bullish banks, and we're going to show you why we don't think that that's a great idea. Futures point to a higher open today, or why it's not a great idea for a shorter time frame. Remember, not everybody has the same time frame. Taking a look at our indices now from a power bar perspective, the Dow adds 56 basis points, 2 to 15 bulls to bears. S&P 500, 86 bips to the good, 51 to 126 bulls to bears there. See what I'm talking about with breadth? Like, we're not getting there. We're just not getting there. Like, if you think of the power bar ratios as a breadth indicator, right? Percentage of stocks that are bullish. You've seen me, some people have seen me give presentations where like, we're just not there. NASDAQ is there though. Up 1% on the day, 25 to 22. Small caps, 72 to 378 bulls to bears. I'm sorry, up 72 basis points, 267 to 378 bulls to bears there. Bonds down tick, healthcare, leadership, one of our fave groups. And actually got a little bit of a relative pullback last week. Check out my note from yesterday. Speaking of, could be a little healthcare heavy today. The stock that I'm highlighting in my note to Chaikin Analytics clients is Humana, HUM, as a bullish type idea, or name to consider on the bullish side of the portfolio. Take a look at it here. Humana, HUM, very bullish Chaikin power gauge rating. strong trend, strong industry group as it consolidates just below all-time highs. Now, our overbought, oversold indicator is oversold and beginning to curl higher. Money flow is bullish. So what do we have here? We have a very bullish stock that's outperforming the market, oversold with bullish money flow, trading near record levels. Folks, that's the setup as far as I like it, right? I realize that I am more of a trend following momentum type investor, right? So I'm almost never a buyer down here, right? Humana gets more interesting as it starts to take out trend lines. And now as it consolidates below the highs, kind of builds this base and is oversold, it becomes really interesting to me. That's me. A lot of different ways you can slice this. Pullbacks to 360 look interesting. Breakouts above this most recent high look interesting as well. Know who you are as an investor. Know who you are as a trader. Again, getting back to kind of, I'm on this rant because it bothers me that people blindly follow other investors without doing the work themselves, right? So you have to know you. And the market's an expensive place to kind of learn who you are, but maybe it's worth it. Taking a look now at our sector tracker, the movement of the last 5 days of trading. Comms at the top of the list. Thank you, FANG type stocks. Technology at the top of the list. Thank you, FANG type stocks. Energy still in the number 3 slot. But honestly, again, like I said yesterday, who cares? 3% of the S&P 500, literally, who cares? And healthcare. So comms, healthcare, and tech are the areas that we've liked a lot. Staples was another area that we've liked a lot, but it's fading, and that's fine. Discretionary material, staples, REITs are middle of the road. Utilities, industrials, and fins, bottom of the list. Fins just completely uninteresting to me. Maybe the next energy, who knows? Like, the group trades that badly. We'll take a look at the banks a little bit later on in the show. Taking a look at our industry in focus now, healthcare services, right? So there you go. I highlighted Humana in my note, which is already in for publication. And as I put this show together, we get healthcare services, right? Take a look at this power. Look at the breadth here, 16-1, bulls to bears. For a group that's been an inline to slight underperformer over the past 6 months, lagging the S&P by about 2%. But that ratio, as I said, 16-1 is very strong. It's the top spot, number 1 of 21 subsectors. So why wouldn't we drill down on XHS and see which stocks are bullish and very bullish, right? In addition to a stock like Humana, you'll find Triple S Management, GTS, Magellan Health, MGLN, Cigna, CI. You'll see Centene, CNC, which I featured here last week and is beginning to round higher and work. And that's intriguing. That's the process, right? Take a look at what's happening in the market. Take a look at where there are pockets of potential leadership. Drill down on the stocks. So we're neutral rating, 16-1. Trend is weak, below the trend line here. Oversold with bullish money flow. But look at how relative strength has been getting gradually better over the course of the past few months, right? Big underperformer, less so, trying to outperform, right? Kind of call it an inline performer, but improving. So that's intriguing to me. That's something that's changing on the margin. Potential new leadership, right? New relative momentum potentially. That's interesting to me. And there was just some quality names there, 16 names that you could be doing work on, right? See how it works? So you're not blindly following people into the market. You're doing the work yourself with a little guidance. And I think that that's honestly the best way to be successful in the market longer term, is to figure out what works for you, your risk profile, your time frame. Utilize smart people. I read from smart people all the time to get their thoughts, their views, their ideas, not to get their trades, to kind of see if I'm thinking about things the right way. Maybe, reading what Warren Buffett thinks gets you to think about something in a different way that you might have never thought of, but blindly following Warren Buffett into the airlines and the banks, quite frankly, has hurt you. Taking a look at what's trending now, yesterday's S&P 500 movers and shakers. The leader side of the board, I'm not going to harp on all that much. Mostly earnings related, with the IPG Photonics, IPGP, up 21%. Back of their earnings, also a buyback. Everybody else in here, Jack Henry, Seas, Most, Regeneron, name that we've been highlighting a lot throughout the downturn, all reporting earnings, all trading higher. Loser side of the board, this is amazing to me. Norwegian Cruise Lines raises $2 billion in equity. But I guess, they had to take care of the legal framework first because they updated their 10K by putting going concern language in the 10K, right? Which makes sense. I applaud them for doing that. They don't want to open themselves up for, selling $2 billion worth of equity and then potentially filing, and, that would open them up to a huge can of worms. So now if you took down any chunk of that $2 billion equity offering, there is a don't say we didn't warn you element because they added going concern language to their 10K. Stock down 22% on that news and the pricing. Royal Caribbean down 10% goes along for the ride. WRK announces earnings down 17%. Leggett and Platt, LEG, very bearish stock. Earnings take 10% out of that stock. UNM earnings take 10.7% out of that stock. Let's dive into what I'm talking about in my note today. Sentiment's flat on the week. No matter how I slice it, no matter how I look at it, the sentiment metrics that I look at were flat on the week. Taking a look at the 13-period moving average of the CBOE equity put call ratio. Basically, it was 0.62 last week. It's 0.63 this week, towards the bottom end of the range of quote unquote normal, right? So we had extreme bullishness, then extreme bearishness. So extreme bullishness into the start of the new year, new decade. Remember, it seems like so long. Doesn't New Year's Eve seem like so long ago? You're saying to yourself, new decade, 2020. Life comes at you fast. Overly bullish January, February, overly bearish March, now just kind of in the middle of the range of normal. Sentiment indicators are one of those metrics where they're most telling at the extremes and in conjunction with other metrics, in my opinion. So in the here and now, not that interesting. Same goes for the VIX. The VIX, I guess what's interesting here is it continues to decline. But, over the past 5 years, I mean, the current level is still considered elevated, right? Look, you can see where the peaks have been over the past 5 years. Right? We're just getting back to the peaks, right? So VIX by no means back to normal levels, normalizing maybe, but by no way, shape, or form back to normal levels, or what's normal in any market environment, but quote unquote normal. So that's how I'm kind of framing it up. CNN Fear Greed Index around 42 from 44 last week. So sentiment flat on the week. I said, I want to take a look here, though, at positioning. Something new I've included in my note today is digging in on the commitment of traders report and just looking at the net positioning for both large and small speculators, right? So I combined the net positioning for both of those groups, large and small, to kind of come up with where are they currently. And again, very much like sentiment, positioning is one of those things where it's only kind of interesting at the extremes. And what's interesting to me is looking back at the lows of the market, the 52-period Z-score of this speculative positioning metric was below less than 4. Okay, so that's extreme, right? The speculators got caught extremely short down here. Okay, remember the conversations, we're going to retest everything else. Think about how you felt on March 23rd. The specs were caught short. What's amazing to me is that after this rally that we've had, and we've had kind of 3 weeks of sideways, but after this rally, this is a weekly chart. After this rally that we've had, the Z-score is still around -3. So the specs are still very much short, right? Which is why I think a break of 295 to 3,000 to the upside probably opens the door to a fast 110 point hand move in the S&P 500. So it makes sense to be paying attention to what's going on there. And I said we touch on banks. Here's KBE, bank index, breakdown, consolidation below support, now resistance. RSI can't get out of bearish ranges. Trying to in fairness, right? We keep an open mind. Can't get out of bearish ranges. Below the 200-day moving average, all while massively underperforming the S&P 500. So by our work, by the way, this is a bearish ETF. So by our work, not an area of the market that looks all that compelling to us. So why would you be there? It's going to wrap us up for today. Take us for a test drive. I'll be back here with you tomorrow.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.